Differences between silver mutual fund and others investments. There are a few key differences between investing in a silver mutual fund and other types of investments. Asset class. A silver mutual fund is a type of commodity fund, which invests in physical silver and silver-related assets such as mining stocks. Other types of investments, such as stocks, bonds, and real estate, are in different asset classes. Risk and return. Silver mutual funds can be more volatile than other types of investments. The value of silver can fluctuate dramatically depending on supply and demand factors, and this can result in both large gains and large losses for mutual fund investors. Other types of investments, such as bonds, tend to be less volatile but also tend to offer lower returns. Diversification. Silver mutual funds can be a useful way to diversify a portfolio, as the performance of silver tends to be uncorrelated with other types of assets such as stocks and bonds. Liquidity. Silver is a tangible asset, it can be bought or sold easily, and most mutual funds that invest in physical silver allow investors to redeem shares on a daily basis. However, it can be harder to find a buyer for a large quantity of physical silver and the transaction can be costly. Storage. Physical silver can be stored and it may require special storage conditions and insurance. Some silver mutual funds might not have the physical possession of the silver but instead invest in other forms of silver such as mining stock or ETFs management. Silver mutual funds are typically managed by professional fund managers who make investment decisions on behalf of the fund's shareholders. Other types of investments, such as individual stocks or real estate, may require the investor to make their own investment decisions and manage the assets themselves. Fees and expenses. Silver mutual funds typically charge management fees and other expenses, which can eat into returns. These fees and expenses may be higher than those associated with other types of investments such as ETFs or index funds. Taxation. The taxation of a silver mutual fund can be different than other types of investments. Silver is considered as a commodity, and it might be subject to different tax treatment depending on the country regulations. It's also important to note that silver mutual funds may generate capital gains or losses, which can have tax implications for investors. Access to information. A silver mutual fund typically provides investors with regular reports and other information about the fund's holdings and performance. Other types of investments, such as individual stocks, may not provide the same level of transparency. Risk profile. Investing in a silver mutual fund requires a higher risk tolerance than other types of investments, such as bonds or savings accounts. The value of silver can fluctuate dramatically depending on various factors.